Well, Black Friday couldn't lift Wall Street, the three major indexes finishing down roughly a little less than 0.5%. Well, since Black Friday, let's talk retail stocks and get the outlook from retail. We're joined by Phil Bach of Exponential ETFs, perfect person to have here today because Exponential also has this fund called the American Customer Satisfaction Index ETF. Welcome, Phil.
Thanks, friend.
So, Phil, why couldn't Black Friday lift investors' spirits?
Well, Black Friday, of course, is all about the consumer. It's all about consumer spending. And when you look at consumer confidence, consumer comfort, you look at the American Customer Satisfaction Index, the broad measure that we look at, all of them show trending downward in overall consumer confidence and consumer spending. Consumer spending has been flat to this point, but the confidence levels in every survey that we see is starting to decline, and we're concerned that the consumer will continue to spend.
What do you think that means for the economy? Because the consumer has been the linchpin, the driving force behind economic growth at a time when corporate spending has been really cautious and down.
That's right. I mean, there's a number of factors here. You look at unemployment is on all-time lows. You look at salaries, what people are getting paid is relatively flat. There's a lot of mixed signals that we're starting to see. And when I say that the consumer confidence numbers are declining, they are, but they're still relatively high. They're not as high as they've been from 2017 to 2019, but they're slowly starting to turn. Clearly, the Fed is concerned and they're trying to get in front of it. Clearly, there are some, rumblings, but overall, we're still seeing a very solid overall economy. The market is still on all-time highs, or coming into today. So overall, we don't see a tremendous amount of concern, but it's something that we need to start taking note of. And as you look at the consumer spending, you look today, very anecdotal, but you walk in the streets. We're here in Midtown. You tweeted out a picture of Best Buy. I have to say, I love your Twitter feed. It's a great place for market updates and for Japanese culture and lots of interesting. But the picture of Best Buy was pretty sparse, and it's very anecdotal. But you have to wonder what are the spending numbers going to look like.
So what does it mean overall then for a company like the online giant Amazon.com and its prospects?
Well, Amazon is dominating, and you're not going to see Amazon shoppers in the streets there on Amazon because they can avoid it. Amazon is now doing more than half of all online shopping, and we're seeing online increasingly take revenue from brick and mortar more and more. It's a one-way wrench. It's only going in one way. I think when you look at Amazon, you really have to look at where they're expanding, what are they doing with PillPack, with Whole Foods, with the other expansions of their business, and what are the regulatory risks, the antitrust risks, what are the risks that they're going to be seeing in the future. That's a major, major concern for looking at Amazon. But in terms of monetizing their user base and in terms of increasing the growth of their current user base, there is no concern there.
So pick up Amazon. Amazon's only up about 20% this year compared to the S&P's rise of about 25% this year. What about some stocks that you'd say take profit on or dump?
Well, there's a number of retail companies that you look at and you say, well, what is their digital strategy? What are they trying to do? JCPenney comes to mind when they made, the big hire of Ron Johnson from Apple, and you're expecting some big splash or some big, something, and that might be in the works, that might be coming, but we have not seen it yet. And now we're looking at a company with a lot of debt, with an in-store strategy where they, went from showing discount prices to saying, hey, we're going to offer it full price and make a different emotional appeal to our customers. Well, the customers have not reacted well to that. We're seeing the customer satisfaction scores at JCPenney decline, and they're declining pretty rapidly. So you're wondering, what is the strategy that they're looking to enact? When is it going to come to play? And if it doesn't happen soon, we think there's going to be more pain in JCPenney.
One more stock I want to ask about, Alibaba. It just listed on Hong Kong. 2 days after the listing, it's up 10%. The stock's up 46% year to date. What are its prospects? There are some worries about Alibaba because of the friction between the U.S. and China earlier this year.
That's right, yeah. But when you look at what happened on Singles Day, so Singles Day in China, Alibaba did $38 billion in sales. That's significantly more than we see in the U.S. in Black Friday and Cyber Monday combined. That is an astronomical figure. Now, there are some people who are questioning whether that is in fact, a real number and how to audit that. But if you take that number at face value, it dwarfs Amazon, and it certainly dwarfs the rest of the retail sector here in the U.S.
Sort of a combination of Amazon and eBay, the way that company.
That's right.
All right, Phil, thanks a lot for sharing your thoughts on the retail sector. Appreciate it. Our thanks to Phil Bach of Exponential ETFs. I'm Fred Kantayam, and this is Reuters.